Trading futures, options on futures, and forex involves a substantial risk of loss and isn't suitable for all investors. Past performance, whether actual or indicated by historical test of strategies, is no guarantee of future performance or success. There's a possibility that you may sustain a loss equal or greater than your entire investment, regardless of which asset class you trade. Therefore, you should not invest or risk any money you couldn't afford to lose. When you log into the Trading Room service, there are 3 tabs on the page. Clicking the first tab takes you into the trading room. Remember to click the unmute button on the player to hear the sound. To use the chat area, start to type in the message box. You'll then be asked to log in. Select the Login as a Guest option to get started. When you click the second tab, you access the session archives. These go back for a rolling 1 month, so you have 30 days to access any of the sessions. Finally, clicking the third tab gives you access to the month's trading performance. There are 3 sections. The first shows the last month's performance. The second shows the performance for the year to date. And the third section shows the last 20 trades in detail. Subscription to the trading room includes access to the private WhatsApp group. To join...
Right, hello everyone. Today's the 21st of April, Friday. We're going to start a live trading room event today. Please, for those of you who are part of my room, please do let me know onto the chat area. You can hear me okay. And also, people who have joined in through the YouTube link, please do let me know if you can hear me too. I can still see people logging in. There's loads of you here, so I do apologize if I don't say hi to everyone out there. We're going to have a couple of guests today coming in. They're probably going to join me in a bit. Once they come in, I bring them into the room, into the event. I think Tiro should be here. Let me just say a quick hi to him. Hello, Tiro.
Hey, Aram, how are you?
I'm very well, thank you. How are you?
Yes, very good. Yeah, just got 1-2 minutes late. We're just catching the trade on the cable short. I'm sure you guys are on it too. Yes.
Yes, definitely. I was going to talk about that in a bit, but anyway, you're here now. I think Gavin has an issue with his connection, but he said he was trying to get in anyway at some point if he can. He did try it coming to the live trading room with his phone, and it worked perfectly fine. I mean, it was great. You know, he has good connection and everything, so it should be okay. So what I would do, Tiro, I think because you were going to do a sort of like a short presentation for everyone, Gavin was telling me, in regards to the trades you're taking right now with the SMI, just to introduce the SMI to everyone and also go over the trades. And if there are any questions that come through, I will let you know. So you can go ahead and present your screen to me so I can just share it with everyone.
Yeah, let me just do that in a quick while here. Let me see. Let me see how we can do this. Actually, today was I think it was meant for the paid members, but I guess it turned out that Gavin's thing didn't work. But in any case, that's good for the guys over here. They can get. I will go through what I was meant to go through with them, which I really wanted to go through a bit of strategy construction, and also at the same time we'll flip between screens and see the live positions.
Okay.
And it will definitely give them a lot of clarity. And then there were some questions about the SMI, and at that time I think I can then go through those questions as well. So I think let me just write that.
Perfect. Also, just explain, if you can, just simplify version of SMI to those of the people who are out there who haven't seen it in the past. So they just want to get the idea of what's going on before we go into the more detailed bit, if you don't mind.
Yeah, that's absolutely fine. I think I've written the 3 things now what I need to do. Let me just bring up these guys then. Let me see. Right, let me see. Quite a bit of triggered as well. Yeah, let me just bring up the screen. The S&P has gone down as well. So yeah. Okay. Let me see if I can also find this one. Just give me 2 minutes. I'll just bring it up. Have you been using the SMI, Aram?
I have used it, but it's more beneficial on. I see it more beneficial on a 15 minutes, an hourly, half an
Correct.
hour chart. Much more better for me.
Yeah. Totally agree. Let's see. I'm just going to bring this one up. Let's see if I can find this one. See if I can. Right. I think there is.
If you want, you need to do just present, and then share your screen.
Yeah, and then I think we can definitely start. I'm just looking for this file if I can see it for them. Let me see. Yeah, let me see if I can find it in the other way. I think it might be this one. Yeah, I think this is the one. Yeah, I got that one. So I think I can show it to them later as well. And then we can take a look at. Right, got it. Okay, great. So I think we're good to go. Let me just show them all of this then, what's going on. Yeah, we're having a nice move over here. We can show them this. Right, let me present. Let's see if they can see this or not. Stream, present, share screen, entire screen, screen 2. All right, good. Can they see my screen on GPSD on the trading view chart?
Yeah, we can. Thank you very much, Zero. Yep, it's
Okay.
on there now.
Okay, good. So I'll just tell them a little bit on this. So in terms of live position so far, what we are looking at, guys, we took a short position here. We were long on a higher time frame, but looking on the shorter time frame and the stretch analysis, which I'll talk about in a few minutes, we are taking a short position. Now, when did we come in? What are the live positions at the moment? You can see over here in terms of cable, we came in around here on the 15-minute time frame. So we got about 3 positions at the moment running. The first one, Aussie dollar, that one is more of a weekly trade, which is going against us at the moment. But remember, we will hold on to it more longer, so we will see a lot of volatility in that. That's fine. I'll explain the methodology later. In terms of GBP USD, we're currently, this is the short position we got for a lesser time frame that we are looking at. Now, currently, we're just up a little bit, 184. We got another position on the S&P as well, on a short position too. So, what is the rationality between all of these trades? What is the time horizon? S&P and GBP USD is more shorter term trades, and the Aussie dollar over here is more longer term trades. When you got longer term trades, you must see a lot of unrealized profits and then that diminishing away and then coming to unrealized loss. But the shorter term trades then is a different ball game. So everything will have its own type of management and own types of objectives, which is what I'm going to go through today in terms of strategy construction as well. Now, to give you guys a rough overview of the rationale of this shorter term trades over here, what we are really looking at, let me just go on to trading view over here. What we are really looking at, traders, was that we looked at this pattern formation on the daily time frame. We saw that at the moment we got this big outsider bar, which came about 5-6 days when we presented on the Traders Basecamp package, where some of you would have been there. Now, when we got this big outsider bar, that's what we call a potential top. Okay. Now, when this potential top becomes a confirmed top with an orange arrow, is when our formulas get fulfilled in the way that we have quantified a top and bottom here at Master the Markets. At the moment, this is still a potential top because I do not have an orange arrow and I do not have an orange dot to say that any of these bars have confirmed the top. Okay, that's the first thing, just an overview about the SMI. Now, so therefore, this is still a potential top. Now, however, with looking at the lower time frames today on the 4-hour and the 1-hour, we saw that there's a higher probability for this to become a confirmed top and for today's bar to go more to the downside. Now, how did we look at that? The first principle, what we look at in terms of today's bar, very simply, we look at ranges. We look at average range for a day. Okay, average range for a day. So, for example, if I take a look from yesterday's bar, so because today's bar is not formed yet, right? It's still got some time. So, if I take a look at yesterday's bar and I put my cursor over there, I can read my average true range number here, and that tells me it's about 86, right? It's about 86 pips. Now, however, when I take a look at the range for today, let me just take a look at the range for today. That's still about only about 80 pips. So it's still about 6 more pips to go. And even if it then does take it out and go to 100 pips, we can write that move on today if it becomes a larger range. So that's the first thing I want you all to notice. The average range it forms between a high and a low on a daily time frame is about 86. Okay, so I'm looking to capture that range on the lower time frames today. That's point number one. Okay, that's a recurring principle that keeps happening every single day. You'll see that the average range, right? That's between a high and a low. And this is a highly liquid instrument, British pound US against the US dollar, GBP USD cable. So it will form a range, an average range. Now, if it doesn't form, of course, then you get a flat line, right? Which is what you won't get in highly liquid instruments like this, okay? So that's point number one. Then point number two also, traders, you can also see that today is Friday, isn't it? If I go on the weekly time frame over here, right? And I can do the same thing again. So if you take a look, the average range is about 232. Today, in terms of cable, what has it done? Let me just take a look. in terms of cable, it's only done 126. So there's still another 100 pips more to go, roughly, isn't it? Yeah. If you can get the direction right towards the lower time frame. There's a high probability that it will do it because that's your average, isn't it? Yeah, there's 100 pips more to go. Now, so all that is good, right? So I've told you in terms of the daily range and the weekly range. So we can see from the weekly, because it's a Friday, it's still got 100 pips more left to go. In terms of daily range, it's got 6, but this has got to match up. So highly probably we can leave it to run if our positioning for the direction is right. Now, that's on the ranges, yeah? That's on the ranges. So we've got that objective. So it's got about 100 pips more because of the weekly end as well. The second thing is, some of you might say, but Thiru, how do I know which direction to take it? Is it towards the down or towards the up? So to understand that, traders, what we then do, we look at a principle, another principle that keeps recurring in the market. I'm going to be talking about all this more in detail as we go through strategy construction as well. Now, the second principle then we look at is what we call the stretch principle. Now, the stretch principle was bigly popularized and got famous by the big hedge fund billionaire trader called Toby Crable, okay, by his popular book called The Opening Range Breakout. So what is this stretch principle on? In fact, he actually also learned it from a mentor's mentor as well, but he just wasn't named. And he actually was the first one who introduced the stretch principle in the 1960s, which then Toby Crable then took on and popularized it. Now, in terms of the stretch principle, what does that mean? You see, traders, if you take a look in an OHLC bar, right? First thing is high and low. The high, there is 1 point. The low, there's another point, isn't it? Yeah, 2 points. Very simple. Vertical bars. Now, if I introduce one more point in there, which is the open, yeah? Let's not think about the close yet. Let's just think about the open. Once I insert an horizontal line called the open on the left-hand side of the bar, immediately this entire OHLC bar, without the close, gets segregated into two parts. One is a smaller range from the open, which is also known as the stretch, and the other part, which is known as the bigger range from the open. In other words, one of our Vedanta elite members used to say that's called the bro, right? Yeah, hey bro. See, that's quite a bit hilarious. But that is the BRO, bigger range from open. Now, every day this is going to happen, right? Because if you take a look, traders, this is a recurring thing again. If you look at every single bar here, when you look at the bar, there is, let me just move this line a little bit further down. If you look at this bar here, if you forget about the close, from the open, there's a small tiny bit to the low side, and then there's a bigger range from the open to the upside. Is it not, traders? Yeah. And in fact, even if you take a look here, look, there's a stretch here, and then there's a BRO there. Every single day this happens. Usually for a green bar, most of the time the stretch is towards the low side, the smaller range from the open, and then the bigger range happens to the upside. Is it not? And then for the red bar is the opposite way. The only time when you won't get a stretch is when do you think that would be? When is the only time when we would not get a stretch? When the open is where in relation to the high and the low? And when would we not also get a BRO as well? Let's see who gets it. If anybody replies, would you be able to see the comments, Aram? Or I think I
Yes,
won't
I
be able to see it.
yes, I
Yeah.
will. Thiru, if I do see anything, I will let you know.
Yeah, no problems. That'd be great. So yes, some of you, as you may be thinking about it already, the only time when we don't get a smaller range from open and a bigger range from open is when the open is right in the middle between the high and the open, and it's equidistant, right? And that usually, as you know, when you have seen all these bars, it happens very rarely. Okay, so that's the second principle I want you all to understand as I go into the lower time frames. So what is it then we are looking at? So we are looking at one, which is the range, and the second, which is the the stretch principle. Okay, traders. So when I take a look at both of this, so let me now put it onto the charts. So when I take a look at this in terms of today's charts over there, the range is, I'm looking at about 6 more in terms of today, and in terms of 100 more in terms of the for the week to end. Yeah. So if I were to take a look at that, then let me show you on the 1 hour time frame, and I'll show it to you on the 4 hour as well. But maybe I can show it to you on the 4 hour first. Let me see. This one is the, yeah. So I'll go on to the 21st of April. So I'll put a vertical line there, and then we can take a look at it from that particular point. Let me see. Vertical line here. This is the 21st of April, right? Starting off as of from this point onwards. And then in terms of horizontal line, let me just put one here as well. Right, so, and I'll make this a dash line. So in terms of the opening price, right, remember I'm correlating the stretch principle and the range onto the 4 hour now, and I'll do the same thing on the 1 hour as well. So if you take a look, traders, what I'm really actually doing here is, this is the start of the day, right? From this blue line, maybe I make it into a different color. And we can apply this principle to anything, okay, to all the other instruments, and I'll show that as well. So let's see over here. So we got the start of the day, right, today. So this 3 bars over here, what we're having, this 4 bars that's formed here, is this 1 bar that is forming on the daily time frame. Yeah. So let's correlate all of this together then. So then based on that, so let me just, yeah, do that. Now coming back to here, what we are then looking at is, this is the open price, which will be the same as the open price over here on the daily time frame. Then the second thing that I'm also looking at is also this as well, which is, I'm also looking at the how much it did above the blue line, which is just this small tiny part, right? And how much it did below the blue line. Yeah. So in terms of that, as of now, what has it done? So let's calculate that and see. Right? Let's calculate that and see. So that one here, it's done to about 4 pips, and then to the bottom, it's done, let's see, 75. Yeah. If I want to get exact, let's do that. Let's say the high 12446, and then the open is 12441. So it's 5 to the top. So let me just write that down here. So it's done 5 to the top, right? So let me just put green. Let me just increase that size as well. So you can see that's 5 to the top, and then to the bottom, let me change that to here, to the red, and then can I write that in? Let me see, settings. There we go. And then what did I say? It's done to the bottom. So 75, or we can calculate exactly. Let's see. So that's the low here that is done so far. So the low would be 12367, and the open was 12441. Yeah, 2441 minus the low, which is 2367. So 2441 minus 2367. Let me just get that right. So yeah, that's right. So I've got that. So that is 74. So that's 74 to the downside. 74 to the downside. Yeah. Okay, cool. So we got that. So now 5 plus 74. So overall, it's done about 79 pips altogether, isn't it? So the range so far is done about 79 from the high to the bottom. Let me just get that right. 2446 minus 2367. I think that's what we've done here. So 2446 minus 2. Let me just do that. 2367, which is 79. Okay, that's what adds up. So I believe you guys got the right picture at the moment. Okay, so 5 to the top. So you see everything is matching up together, isn't it, on traders? Yeah, so 79 pips is done from the range from the top to the bottom. Then also in terms of when I put in the open price, it's done 5 to the top, right, and 74 to the bottom. Okay, in terms of our average range, it has done 86. So there's still a bit more to capture, isn't it, if you want to take an intraday position on any technical level break. So in fact, if you want to go strictly by in terms of range, there is 7 pips more to be taken, right, to match his average true range of 86 pips, 84, sorry. No, 79. This one yesterday was 86. That's right. So 79. Yeah, there's 7 more pips left. And in terms of the weekly range, because it's the end of the week, there is about 100 pips left as well. So now the question is, once we correlate all this together, where is the bigger range from open going to form today? Where is the higher probability? Is it towards the downside or is it towards the upside? As of now, it is showing towards the downside. Is it not, traders? Yeah, when you correlate all the time frames together as well. Not only that, traders, another thing you can also look into in terms of correlating also is if the BRO is to form to the upside today, you have to understand that with the amount of time left, which is about 5 or 6 hours, it's got to go all the way up, travel all the way up, take out this high, and then it's got to form its 100 or 80 pips to the top side. So that will take a lot of resistance power, which is about from here, if it were to do it, so if it were to form it to the upside, 79, then it's got to do another 7 pips there. So 7 pips more to here, so 87. So from where, if it's got to form into the upside, hopefully you guys are getting the drift. But from here, if it got to form to the upside, what I'm saying is it's got to form another 60 pips more in a matter of about 3-4 hours. So you just have to see from here, you can actually look and see how the BRO is going to form and which has got a higher probability towards which side. Is it towards the downside or is it towards the upside from in reference to the open price? Okay, so that's what we have at the moment. Now, this is based on the principle of ranges and the stretch principle. And the stretch principle is all got to do from the open price reference. Okay, that's the 2 principles I want to give you at the moment now. As you can see, I can correlate this all together. Same thing, I can do it on the 1 hour time frame as well, which is over here. So again, I correlate this onto the 1 hour time frame here. And after this, then we can take any questions if there are. It's a really powerful way of looking at it because it's a recurring principle that will keep happening throughout the days, right? Throughout the weeks.
Right, Tiro, thank you very much for that. I mean, can we also look at the VSA in relation to the SMI as well, which is
Yeah,
good?
spot on. Yes. I think I definitely will overlay it now. We can take a look at that. Let me just put the vertical line there. And then to mark it. So that's the start again. So in relation to that, so you guys can see the same time here. And then in terms of the open price, 12441, right, which is around here. So it's all matching here, and then we can see how much it has done to the downside as well as to the upside over here. Okay, so good. So we've done that. So now let's put the VSA on here as well, which is very powerful in terms of looking at the volume and the trend coming in as well. So here we can have all the relative volumes here. Let me also, and we are seeing that, interesting enough, as we took that short position, we can see that the first dot here, I'll maximize this chart in a moment, and then we can take a look at it very closely. And I just need to put this one onto here as well. Okay, good. And I will put this one here as well. Okay, great. Cool. So let me maximize this and then we can take a look at it much more closely. Let me do that. Let me hide the other volume. We don't need this one anymore. And great. So we can see now in a much more clearer fashion, as I said, the BRO higher probability, the bigger range from open is more to the downside. You can see that the VSA dot is also confirming that as well. And in terms of volume as well, in terms of volume, we are seeing a little bit more higher volume, not really anything exceptional, but maybe only for this one here. You can see that the volume came up on this green bar, but the next bar was a bit to the downside. We still need to wait for the close on this in terms of the 4 hour. But you can see an immediate reversal with the low of that green bar being taken out. So in terms of that, this shows that not really true that this was really true buying strength that came in over here. Okay, let me just quickly take a look on the 1 hour as well, and then maybe Aram can come in and also tell us about more about the volume analysis as well, if it marrying up with what I am doing here. Let me hide this, that one there. That's good, that's better. And on the 1 hour, it's a bit more, much more clearer. We have the VSA diamonds coming as in also red, with the SMI confirming that short position with the orange dot as well, and with good volume coming in on this bar here. We just have to wait for the close of this and see if that volume has supported that selling strength or not, to tell us whether to hold on to that position or to exit it. Okay, but in terms of the bigger range from the open, higher probability is towards the downside. But do remember that all these are probabilities, right? And this is just one trade, so we can't base everything just based on that. But the concepts are very strong and powerful and recurring. Aram, what would you say about the volume analysis? I think you can double check it
Yeah,
as well.
yeah, absolutely. I mean, I can take the screen from you now, so I can just
Yeah, that'd be
purely
great.
show the VSA, if you don't mind.
Yeah,
And yeah, just to explain, on the same chart, GBP USD cable, we have seen an uptrust there, and we have seen another uptrust there. And this is the hourly chart, as you can see. And really, at the moment, these two areas which I have drawn is the high of the day and the low of the day, which is a bit expanded now. So this is really, we are in that tunnel at the moment. But really, as far as the VSA concerns, the thing that we noticed, there are a couple of things that you should notice, is that when the bars are trying to rally up, you have a look at your relative volume and see what's going on. The relative volume of your this particular area, as it's trying to go up, you can see the relative volume are reducing. So there's no interest or higher prices, and that's why you can see the market, it hasn't really rallied that much up again. And really, to me, it looks like, of course, because of the news that are coming out this week as well, it has influenced this chart quite a lot. But I think next week we are looking for a good setup for a short trade. I really do. I don't think the pound will push up higher at the moment because we are reaching the London fix. They're trying to put the prices, mark the prices as high as possible. But really, what you notice is that there is more weakness there than strength to me. When I say that, obviously the pound has been bullish, has been working high enough, but really, as far as the live chart goes, you look at what really is going on. You're below the trigger line where that potential professional buying happened, and now we've went into an area of what we call a seesaw, where the market really hasn't made any path. The path really hasn't been really going. It's gone into that trigger line area on the upper part, but never gone above it. So now it's come back down into this level, and then it tried to go up again, and that came back down again into this area, and then it's trying to push up now. But really, what we are seeing now is an area where there will be either a breakdown, or if we're going to see higher prices, I really want this to go above the trigger line, and I want to be into this area above the trigger line before consider doing any buying. But right now, the only thing I'm considering in the pound against the USD, I'll be looking for shorting. You can see the trend has changed, and you got obviously two up thrust as well, and we are below the trigger line. So I don't know your opinion on that, Tiro. Do you think I'm right or wrong? Please
No, it
do let me know.
absolutely. I think it's absolutely correlated into.
Yeah,
I was
yeah,
just looking at just now. It's yeah. That's why it always blows my mind when I see both the systems working so
yeah.
complementary. One thing I do want to ask you, which you can also share with the viewers as well, Aram, is that what would you say to traders who don't have that much experience, who get a bit fearful when they have shorted it and then the bar goes against them, just like what it is doing at the moment?
Which one you're talking about? This one.
Yeah, this setup exactly what's going on at the moment. The big fat um, green bomb that comes against them. But how would you say to traders to still hold on to the conviction and trade their plan?
For if you're already in this trade, if you've already gone into this trade, you I probably would say do not panic, because you're still below the trigger line. So, and the behavior of the market hasn't changed yet. Obviously, the way I do it is we look at multiple time frame to the hourly chart here. So I want to make sure that multiple time frames are giving me an indication that this market is purely. I think there is weakness there. This markup they're doing is for the London fix. So really, they always do that towards the London fix. They try to push the market up. But really, as you can see, I don't expect this to finish higher than that level. Let's just put it that way. I really don't see that. We got another 20 minutes. So we're going to be here anyway. So we will see when this bar finishes. I don't think it will go above that level. And then the next bar would probably be more down bar. And the reason the reason I say that, Tiro, is pure and simple. It's because of the uptrust that I have, the direction of the market where we has changed behavior. I can see the increasing volume of selling. When there is selling going on, there are more volumes coming in. So I really feel that there is a bit of weakness there that will reduce the pound a bit further down. I really will not be surprised if it goes down to the 1.23400 level by the end of day today. So we'll see. But this is my opinion on basis of what I do on the VSA. So I could be wrong.
No, I
So
think, listen,
yeah,
I think that's the thing that the viewers have to understand, which is
yeah,
the way in which you explain that and the way in which we explain it is that, of course, nothing is certainty. If anybody is looking for 100% certainty, they're in the wrong game,
yeah,
right? They have to understand that this is a probability game. And,
absolutely. Yeah,
and also, the other thing they also have to understand is that based on how you analyzed it just now, your intellectual conviction is there to hold on to a position even when it goes against you. That's the first point. The second point is to know also when to exit the position when your opinion has been proved wrong. Right? And that's what Peter Brand's famous quote is, what is called what strong opinions weakly held. Why is that? Because right now we might say, you know what, there's a very strong probability that it's going towards the downside, and our systems and analysis also tells us that. However, when the market shows something else, it crosses certain technical levels, it goes against a certain level, and the price action changes, the volume changes, then your opinion will change, and you got to take that feedback from the market to minimize your loss and come back out. And remember,
Yeah.
this is just one trade.
Yeah, absolutely right, Tiro. I agree with you. But I mean, as a trader, I mean, I do that all the time in the room anyway, in the live trading room. Uh, I have my stop loss in place on that
Exactly.
lower trigger line anyway. So until that's not penetrated or nowhere near to it, I do not panic. And I always tell people, have a look, multiple time frame, see what the direction of the market is at the moment. Is the trend is down? So if you've gone selling at that point and now it's working against you, don't panic. If you want to sit in this trade, I mean, I obviously what I do, Tiro, I usually move my stop loss into profit as soon as I can. And even if it comes back and stops me, I still won that trade. I don't, I try to avoid losing, putting myself in a position where I'm in a losing trade and I have to think, second guess or try to, and that becomes really not a good success as a trader. The sooner you move your stop loss into a small profit, the better. And even if it's a small amount, as long as you're into a bit of plus. Um, Now, on that note, Tiro, I think, John, thank you very much for your comment. I do understand it did start at 3, but I think there was some video feed issue. So what we will do, we will prolong this event to about 4:30. So don't worry, you will get the full hour whenever you joined. But it did start at 3, but I think there was some feed issue for some of you with the link and all that. I do apologize for that. But anyway, let's come back to this. So now, Tiro, say now.
It's always good to know there's very enthusiastic viewers in the crowd, isn't it? It's very nice.
Yeah, they are lovely. Yeah, I mean, especially in my room, they are fantastic traders. I mean, I
Very
would
good.
say all of them are very, very positive, and that's the thing that I do as well in the room. I always try to bring that positivity into
Very good.
people, in
Very
a
good.
sense that it doesn't matter. I mean, I had an issue with one of the people in the room that wrote a nice email to me and said, well, I've been losing and for a few days now, and then I try to obviously explain what have you done different if you've been successful for a while and then suddenly a couple of days you've lost trades. What have you done wrong? So obviously the issue was his personal issue, and it was a psychological issue rather than his ability of trading. Do you understand? Because psychologically, Terry, as you know, it does affect us humans very much. You know,
Absolutely.
very much
Absolutely.
so. And for me, I have killed that, Tiro. I've killed that psychological behavior. I mean, I've learned to process that through my medical life. So now I put that into practice into my trading life, where I do not care if I lose a trade. I do not cry about it. I learn from it,
No.
and I obviously, when I do trade, I trade within my risk management. I have a risk management in place. I would not over risk my trade. I stick to the rules, and okay, 90% of the time goes with me, 10% of the time goes against me. That's part of what traders should know and understand. I think it's very important. So now, coming back to this chart, Hero,
Mhm.
the reason I say there is weakness gonna come in is I go based on the VSA methodology, based on the Wyckoff accumulation and distribution phase. And this is the area where I think the breakdown will happen. Why? Because of the uptrust that I have, the failed test that I have, and where we are on the position side. And look, this bar now that I told you is never going to finish above that line. Look, it's come back in the middle now.
Spot
And
on.
we got really. So if your stop loss is here at that area there, if your stop loss is there, which it should be as a trader when you're trading short, you should not panic.
Spot on.
And until your behavior also going down, you should believe in this system, because if you believe in this system, you obviously, I'll tell everybody when you start doing these systems to practice with simulation or paper money for at least 150 to 200 trades, just to get confidence and know exactly what you're doing. And once you know and you understand the VSA methodology, and obviously with SMI as well, which helps a lot as well. And if I bring SMI on, actually, let me actually do that. There you go. So now you can see.
Yeah,
look,
it combines together. Yes.
You got that dot there. You got UT.
Yes.
Do you understand? So why should you panic when you got
Spot
two
on.
systems telling you that it's going to go down? Your actual trade trend is down. You haven't changed trend. You should not panic. You should really believe in this system and believe in yourself and stick around and stay there. As long as you're not triggered there and you haven't been wiped out, why you should panic? Just stay. Especially if you're a swing trader. This is a swing trading. I mean, for me personally, I do a lot of trades as a super scalper, Tiro. And on this particular bar, I probably would have done at least 10 trades on a winning side on a 5-second chart. Do you understand? And I have shown that many times in the room, in the live trading room, and people love it. People say,
It's
"Oh,
incredible
amazing."
because there's so many ways, isn't it, that you can actually put a trading system together and you trade which fits your personality.
Yeah. Now, to put that into perspective for everyone and for people who are out there and wondering, oh, how did he do 10 trades on this particular bar here, right? So this bar here, this is my interest. This bar is an interest. Now, if I go to the 5-second chart and just squeeze the chart down, obviously, as you can appreciate, what I will do, I remove the SMI for now because that causes that too much thing. But just to show you, look, this is the reason why I would have traded this on a 5-second chart, because of the direction of the market is going down. So I wait for the right principles to appear, and I will go in and trade this on a short. I could have done it on a 1-minute chart. Look, again on a 1-minute chart. Look, no demand, change of behavior is come down. Then you have potential professional buying. But here, where loads of trades to take on a 5-minute chart. There you go. You got a no demand. And now I can bring the SMI because the 5 minutes is good to have a look. There, look. I mean,
It's
you got
incredible, isn't it? How it
it's
correlates.
amazing. You got no demand, you got change of behavior, and you got the orange dot. That's it. Enter. 5 minutes trade, 10 minutes trade. That's it. You already put yourself into profit. Close your trade or continue with it. Put yourself into a profit and add to it as it goes down. So it's not. I mean, I'm not trying to say it's very simple, but it is when you understand the concept. And when you understand these concepts, it makes your life much, much easier to get in and out of the trade quickly and make profit. And, I can't say more than that, Tiro, can I? I mean,
Absolutely not. That's what we concluded last time as well. When Gavin and I present, we just couldn't say anything much more.
No, but it's this SMI system with VSA works perfectly. I tend to
Yeah,
find
it's
for
mind
five
blowing.
5 minutes, 10 minutes, 15 minutes, it works perfectly well. Let's have a look on the 1 minute chart as well and see whether that has also. There you go. There you go. No demand. You got this orange dot there, but you wouldn't enter there. You wait for a change of behavior, and you would have entered. So you can see the different time frames. You have different entry point, but nevertheless they are the same entry point. Now, I personally, Tiru, I will tell everyone, do not trade inside the trigger area.
They got you.
So, so personally, I feel that inside the trigger area, you should not enter the trade because it's more riskier. It's more riskier. So you want to avoid, because they work like almost like your resistance and support line. Really,
Got
that's what
you.
they work as. So therefore, is but when I see failed tests, that's a sign of weakness. When I see no demand is a sign of weakness. When I see change of behavior and when I see the SMI orange dot, I know this is going to go further down. These are all supports that I need. I don't need more than that. I'll just go into the trade, put myself into a profitable place as soon as I can. And if it continues to go down, I keep adding to it. And there's a management way of doing the trade. Once you enter the trade, there's a way to manage your trade. So it's that's something that I do all the time in the room, in the live trading room.
I think that's really
Well,
good.
yeah, it's. But let's see if we can do a trade. Let's take a trade if we can. We have an opportunity that we can do a trade, not only on cable but on any other instrument. Let's have a look
Yeah,
and see
I'm just
whether we
taking a
find
look
one
on
trade that we could take.
S&P. I just saw something happening on the S&P over there, which I've gone in as well.
Do you want to share your screen and show the trade? That would be
Yeah,
good. Yep, that would be
that'd
good.
be the same thing. And at the same time, I
Actually,
can transit over to present screen, isn't it? Yeah.
yeah.
Am I presenting already? Is it?
You're
Can you
already
see?
presenting. You just
Okay.
put in your
S&P.
chart.
Can
That's
they
it.
see S&P?
Yep, that's it. Everyone can see it.
Okay, good. So traders, so based on the stretch principle, I mean, some of you might not get the stretch principle straight away, but that's fine. It's all recorded. You guys can watch the recording later. But again, based on the stretch principle and on ranges, right? If you take a look, right, this is the daily time frame on the S&P. This is, and then this is on the 4 hour I'm looking at, and then this is on the 1 hour, right? And I've marked that as a green line for the start of the day from the open price here, from trading session hours. And I've also put the numbers here, 3 points to the upside, 19 pips to the downside from the open price. Altogether, it's done a range of 22 points. However, on the daily, you can see that there is on the average true range, which you can read from the bottom, there's 37 points, isn't it, that it usually does. And this is also a top to bottom move here on the SMI. SMI dot came yesterday. So then traders, when you put all that together, from a range perspective, 37 points, it's done 22. So there's 15 more points to still left to capture, is it not, traders? From the open price, to which direction is it going to form its BRO, a bigger range from the open? I would say highly probably to the downside, right? Now, in which order route is he going to take and how much leeway you got to put for the stop loss and all that, then you can calculate that. And even if you're taking on a very, very short time frame like what Aram is doing and all of that, you can still use this cross transfer principle of range and take about multitude of positions, which is what he's doing, about 5 to 10 positions. So it's very flexible. Whenever, now here's the important point I want to pass on to you. Whenever you have got a principle that keeps recurring in the market, like ranges, for example, then a principle is usually cross transferable. It's up to you then how you use it in your entry, your stop loss, and your target to form your strategy. Okay, so that is one important thing that you have to understand. So, in terms of where to enter this trade and all that, we had the SMI dot. Let's correlate the VSA on here as well. And let's take a look at the on the 1 hour time frame. Let me put on the indicators on here. Let me put the trade guide, put the relative volume here as well. Let me close this one. We don't need this one. And there you go. So we got the SMI dot coming from yesterday, which did confirm that in terms of your range points is below the range point. VSA dot is coming also over here as well as red. And then we got the SMI dot happening there. So all is coming together. One low level that we can take a look at is that level to break, which it did. Stop loss for the high of the day. And then we can see how that trade positions itself to carry on for the day. So far, that's what we have at the moment. Carrying on over there. And in terms of GPUSD, we had it bit more coming to the downside, a little bit of retracement now to the upside. In terms of the 1 hour, I'll take a look at as well. So it's closing up over here. So we'll see how that carries on into the hours as we are showing you these trades that are forming. Now, in terms of other instruments, before I go on to strategy construction, let me just show you gold, gold which is happening over here. VSA showing towards the downside as well. Red diamond, SMI also confirming towards the downside. In terms of a stretch perspective, BRO towards the downside. Also marrying up over here, but it's formed this kind of range. In terms of Brent oil, can I see any other positions over here? This is 2.05. This range over here, let me see, this range over here is about 164. In terms of a BRO, highly probably to the upside. Maybe it might be an interruption for today. DAX, on the other hand, it's forming towards the upside as well. It's a bit more resistance towards the upside, what I can see over here. That's what we're having. So in terms of correlations, I'm seeing a lot more towards S&P and towards GPUSD. Euro dollar, on the other hand, I think we are not getting a correlation there too. So GPUSD more, as well as to the S&P as well. So that's the two things I can see that is correlating at the moment. Now, Aram, if you don't have anything much to add, shall I go on to strategy construction and show them the
Yes,
plan?
please. Yes, please.
Okay, good. So the first thing I would say, traders, in terms of strategy construction, if we were to take a look, is one, before you construct any strategy, you see, usually what I usually get, which this is quite weak as well in most traders, is because a lot of online forums and blogs and books don't teach you anything about strategy construction. All they teach you is just ideas and methodologies, which is just being thrown at you, and information is being thrown at you. But how do you put all this together to formulate your strategy, your desired strategy that fits your personality? It's like saying there's different parts of the car, isn't it? Yeah, the gearbox, the clutch, the brake, and everything. But which ones do you choose? Which steering wheel do you choose? What type of engine do you choose? What type of tires and wheels do you choose to finally make the car that you want, right? And that's what car companies do. They look at the desires of the population, and then they fit the car to match that demand or the desire of that population. For example, if a car company wants to sees that quite a large part of the population are into family cars or sports cars, let's say they are a lot into sports cars, sports raving fans, immediately the tools that they choose will be different as opposed to building a family car. Firstly, they would choose a much more turbo, big, fast engine for a sports car. And then they will also choose 2 doors instead of 4 doors. The steering wheel will be different. The accelerator speed, the pickup speed must be very, very different. All this will come into factor towards the objective, into mixing and matching the tools and choosing the right tools. So the same thing, traders, for strategy construction. Eventually here, we're giving you all different ways to trade. Eventually, you have to sit down and formulate your rules. So the first thing you must think about before you even choose the rules and the parameters or the tools, you may say, to formulate your strategy, the first thing you must look at in strategy construction is what type of concept is your strategy going to be based on? What concept is it going to be based on? The concept is usually a recurring principle. A recurring principle. A principle is something that keeps occurring again and again in the market. Okay, traders? So what are some principles that keeps occurring again and again from which you can formulate your strategies? One is ranges, which I talked about. Yeah, ranges on a daily time frame. From there, you can then formulate your intraday strategy. It's a principle. It keeps occurring again and again. A range on a daily time frame every day. Another principle that you can formulate strategies based on that keeps recurring again and again and again and again is that swings. Yeah, a swing principle, which is based on swing trading. Why does the swing got to keep occurring again and again? It's because price, as you know, market principle number one, price can never move in a straight line forever, isn't it not, traders? Yeah. It will, if it does not move in a straight line, therefore it moves in cycles. If it moves in cycles, it will create its swings. And the swings are your tops and bottoms. Your skill is now to capture the bottom at the earliest point possible, near as possible, in a reliable way, so that there's still move left to capture. But the principle remains. Swings will keep occurring in the market. Like that, you can formulate your own principle first. This is what we call the concept of the strategy. You must first define that. Another type of principle that can also occur is that usually, as you know, stops are usually taken out. And after stops are taken out, then you get a continuation move in the previous direction that it was on. So for example, something you can have an upward move, and then you got seller bars, which you can call profit taking, whatever, where stops are being taken out. And then after that, then you got continuation moves. That's another recurring principle that will keep occurring in the market. So I've given you some examples. So that's the first thing you need to think about, okay? The concept of your strategy. What is it based on? And the concept is basically a recurring principle that will keep occurring again and again and again and again. That's the first thing you got to think about before you start to put the rules for your strategy. The second thing then, traders, in terms of strategy construction is that you got to start thinking in terms of objective. What is your strategy looking to capture? What is your strategy looking to capture? Is it looking to capture, for example, as we were looking at gold and all of that, is it just looking to capture the range of the day, and how much of the range of the day is it looking to capture? Is it looking to capture 80% of the range of the day? Or if you're a swing trader, in terms of that swing that you're looking to capture in this bottom to top move, how much of that move are you looking to capture? Usually a good number in terms of swing traders is to capture 70% of the move, of the swing move, right? So this is your objective, right? And if you got the stats as from our smart money indicator, from the entry point onwards, you can say, you know what, I want to capture 50% open equity point. How much move is left? That's what our stats table shows. So this is all comes on our objective. On objective. So these first two things must be first defined. Concept and objective. What are you looking to capture? And remember, this is maybe just for the first strategy. Then you can formulate another strategy again based on your concept and objective. But once the objective for the strategy is met, you then exit the trade on that strategy. So if I were to show you, it would look something like this, a Word document where you write that all down. Concept of the strategy and the objective of the strategy. These are the first two things you must write down. Okay. Now, moving on from that, now, once that has been clear, now you pick and choose your tools. Okay. The first thing for your strategy will be rules for entry based on what time frame as well. Your rules for entry. Now, your rules for entry, then definitely at least one of the rules for entry should be based on trend direction, right? Direction of the trade that you're going to take. What are the rules that is going to determine your direction of your trade? Another thing in rules for entry, definitely you need to include is what are the exceptions? So you see, most of the time you would say that, right? Enter when there is a SMI dot. So let me just go back to the chart. So for example, so you would say that enter when, let's say, SMI dot comes in, and also when a VSA diamond comes in as well, which is what we got today on the gold. But you would put an exception. However, if the range decided by the VSA has not been taken out, I do not take the trade. What is the exact terminology you use for this around this range that the VSA shows? This above and below orange line? It's okay. Maybe I can ask him later, or maybe some of you, or you can.
Yeah, sorry about that, Tiro. What was
Ah,
that? These are called trigger lines.
Trigger lines. Yes, that was the
Yeah.
word I'm looking for. Yes. So
Yes.
you see, the exception rules, as I was saying, traders, is that you can see we can enter when the SMI and the VSA dot comes in, but however, on times when the trigger lines have not been taken out, I would not enter. So these are called your exception rules. Okay, rules for entry. Under rules for entry. So these are called your exception rules. The last thing that you also need to include in your rules for entry is cancellation rules. When would you cancel that trade? You have put a pending order, let's say, right, to enter when the market breaks that level. However, if it doesn't break that level within, let's say, 2 hours or 3 hours and it's consolidating, then when would you then cancel? Or if, let's say, you get an opposite VSA diamond and an SMI diamond, SMI dot coming in, then you would cancel the trade. Things like this, examples. So you need to sit down and write down all those rules. Remember, in rules for entry, definitely you need to have cancellation, exception rules, and you need to have cancellation rules. Okay, and definitely your rules must be also helping you towards direction as well. What are you going to be using for direction towards the short or the long? I gave you some examples today on live trades, which is based on stretch principles as well. Okay, so that's good. So that's on the rules for entry. Okay, good. Then we move on. Then we go on to rules for stop loss. Now, rules for stop loss segregated into two parts. One is initial stop loss and the other one is trailing stop loss. Okay, where does your entry first go in, which is usually, I would say, a blue line I usually mark on the chart. Finally, your initial stop loss. Where does your initial stop loss go? This is where you start off the trade. Initial stop loss, when you enter into the trade, where would your initial stop loss go into? That's what I would say first. Okay, so you have to write that down. Is it going to be based on volatility stop loss? A volatility stop loss is based on ATR, or or any other technical levels, or is it going to be based on a swing low or a swing high level? What is it going to be based on? Is it going to be based on a range, on the daily high or the daily low, current daily high or daily low for the day? What is it going to be? So that's what we call a technical stop, right? Initial stop loss, technical. Or is it going to be based on a time stop? 4 days ago, I want to put it there. Or is it going to be a money stop based on money, right? On your 2% of your account capital, and then you just measure it and you put it there. Or is it going to be a combination of all of that? So this is what we call your initial stop loss. Okay, you pull it all from there. The next thing is your trailing stop loss. How are you going to trail when the trade goes in your favor, right? What Aram was saying just now as well. How do you lock in your profit so that you can't get into loss anymore as this one is going in your favor? How do you trail it? There are some ways that I'm sure in Trade Guide they've taught you, and I've seen as well, which is every, let's say, 2 seller bars or 2 buyer bars, you can trail your stop loss. or you can also trail it behind a moving average, or you can also trail it. In fact, when Richard did a video based on SMI and the VSA, he just showed incredible examples where we're just trailing it behind the VSA diamonds, and that captures very, very big moves, right? Even when SMI gives an opposite confirmation, but just trailing even behind the VSA um, um, the VSA diamonds gives you a really long move to capture. So that's another type of trail that you can do. Another way is when after the stops have been finished, like for example over here, the stops have been finished, and we can trail our stop to the high of that stop bar as well, or uptrust sometimes, as you guys may call it. Okay, so that is different ways of trailing. So come up and write down your rules for trailing. Okay, that's on trailing stop loss. So these two types of stop loss, you must have it all written out. Okay, your initial stop loss and your trailing stop loss under the stop loss category. Okay, good. So just a quick thing on trailing stop loss. What did I say? So there are three different ways. One is in terms of you can do it behind the VSA diamonds, or you can also do it behind stop taking bars, right? Trailing stop loss, or you can also do it behind swing levels. So they're all different ways of trailing your stops. Okay, good. So that's for stop loss. Now then the exit, the final thing is exit. Okay, how are you going to exit your trade? Now before you enter your trade, you should have those pre-trade exit rules. How are you going to exit it? Are you going to exit it based on a target? And that target, is it going to be based on a money-based target? Like for example, money-based target usually is based on reward to risk, right? 1-to-1, 2-to-1, 3-to-1, arbitrary. Or is it going to be based on a technical target, which is based on, let's say, open equity or previous horizontal support or resistance lines? Or what is that technical target going to be? Or is it going to be based on a last swing high and swing low point, which is what the smart money indicator already shows you on the chart over here, right? You can see all our swing lows and swing high points indicated by the arrows, isn't it? Over here. Is it going to be here the target, or is it going to be for the next swing low that is going to capture over here? What is it? Even based on your intraday time frames as well. Say for gold over here, is it you're going to take your target based on this low that is going to be taken out over here? Let me just say, if I were to maximize that, is it going to be based on the intraday time frame over here, going to be taking out this last swing low over here, and that's where your target is going to be. Now all that, you have to write that down. Or is it going to be based on your range for the intraday when it forms this intraday range? And this exit rules, traders, has got to get aligned with, remember what we said in the beginning, the objective of the strategy. It's got to align together. All right, and that's when it becomes a powerful, robust strategy. So that's on your pre-trade rules. Now, however, if let's say an adverse reaction happens, so it's all going in your favor at the moment, right? All going in your favor, and then your target is all based on here. But what happens if during the day it does a big adverse reaction over here of an opposite 3 ATR bar distribution bar to your opposite side? How do you then come out? Do you exit live based on that if it hasn't triggered your trailing stop loss yet? Or do you scale out? Now, all these things must be written out in your exit rules. Okay, this is what we call our before you enter the trade and during the trade. How are you going to be looking at those positions? Okay, looking at those levels, and what are your plan of actions that you're going to be taking? All this got to be written out. Now, when you write all of this out and you keep reflecting on all of them, and you know how your stats also behave for this strategy, then what will happen is you will have less of panic when something goes against you in terms of the intraday time frames, because you got it all written out. So in a recap, what will I say over here in terms of your strategy? Write out your concept, a recurring principle, objective, how much of the move you want to capture in terms of the strategy for that concept. Rules for entry, make sure that you include exception rules and cancellation rules and definitely the direction of the trade that you're going to be taking for. Your rules for stop loss, ensure that it has got initial stop loss and trailing stop loss as well, right? And then finally your exit rules, make sure that it has got the pre-trade rules and then the intra-trade rules as well. Okay, hopefully that gives you a good idea. And the three types of categories in terms of any of these rules, stop loss or exit rules that you can take from, is usually from a technical standpoint of view or from a money standpoint of view, and then the final thing would be in terms of a time point of view. Okay, all of these three things you can take from and formulate into your initial stop loss and your target rules as well. The last thing I want to mention after these four things, so we taken a look at that concept, objective. Second thing is then your entry rules, then your stop loss rules, right, which then segregated into initial stop loss or your trailing stop loss. The final thing was then your target, your exit rules, right? Either it hits your trailing stop loss or either it hit your target rules, right? So either it's your trailing stop loss or your target rules. Your target rules can be pre-trade and also intra as you're in the trade. The last thing, very important, is that you must also write down all your money management rules as well. Okay, how much of your account are you going to risk? Is it going to be based on percentage based? Is it going to be based on the standard lot size? Some traders do that. It's always going to be a one standard lot, or is it going to be 0.1 lot for all of the trades that they're going to take? Or is it going to be percentage based? When are you going to scale out? That should be also in your exit rules as well. Okay, so this would be the 5 things I would say in terms of strategy construction. The more you write that down, the more you reflect on it. And remember also one thing of caution I'll tell you traders over this 15 years of full time that I've been doing this, and over 40 years of cumulative experience between our team and here team and me, is that what I would say is you're not going to get it right the first time. You're going to write something out, and then after a while, after 1 week, you might say, you know what, this really doesn't fit my personality. I've got to go and change it. Then go back to the drawing board. Keep doing that until you find one that fits you. And how will you know finally one that fits you? Is when more and more, when you exit your trade, you are at peace with yourself. More and more, when you exit your trade, you don't look back and you say you regret saying, oh no, you went back high, went so much more higher, I should have stayed in a bit more longer. Or if it hit your stop loss, you might think that, you know what, I should have put my stop loss a bit more further. Without all those thoughts and regrets, if the more and more when you exit, you're at peace with your trading and your exits and your entries, then you're getting more and more nearer and getting more and more set to the strategy that fits your personality. I believe that's that one there. So I'll stop over there in terms of strategy construction. If you all got any questions, just type into the chat box. Aram, over to you. What do you think about all of that?
Fantastic, very nice. There's no question coming through as such, which is, I think, is usually good because people probably understand what you're talking about. And but there's only one question coming on the VSA from John. He's asking me, what does PS mean? Well, John, let me just explain to you what PS means. PS means stands for potential professional selling. I brought the Euro USD 5 minutes chart just to show you the example. Whenever on the VSA light you get either a PS, which is potential professional selling, or potential professional buying, which is a PB, you get a trigger lines appear up and down. What basically works like almost like a support and resistance line. And what does that mean? That means when you get PS, potential professional selling, Doesn't mean you go ahead and sell straight away. There are certain rules behind it. And of course, if you attend the live trading room, that's something that I will teach you, and I'll show you and practice it, and obviously take trade on it. But the general, in the nutshell, the general rules is this: we wait for a change of behavior. You wait for a no demand. If you do not see a no demand and a change of behavior and below the trigger line, you do not enter the trade at all. And that's the reason why you do not enter this trade. Now, this particular bar here is a down bar, as you can see, but this happened in the news on the PMI in the US. So now, what we're waiting for, we're still below the trigger line, and until you've got this trigger line in place, this is valid for your trade. So until the new one hasn't appeared, this is valid for your trade. So you wait to see if you see a no demand appearing, a change of behavior. You obviously look at multiple time frames as well, which you need to be aligned with, and then you can enter the trade correctly. So that is in a nutshell, John. And anyone else have a question for myself or Tiro? Now is the time to ask, because I think, Tiro, I think you've done for the day, so we can wrap it up if there's no question coming through. I do apologize to some of you who had a feed issue on the video, but this is going to go to the YouTube, I think, for sure. So you can always view that from the beginning. That should be no problem. So if you missed that, some of the parts of what Tiro was talking about earlier on, you can always view that on the YouTube link. But let's see if there are any more questions coming through. There's nothing else.
I think the one
John,
question I had, I think one thing that did come through, Richard was sending it to me, was that in terms of, I think Hamud asked a question in terms of how to use the open equity tables.
okay, if you want to explain that, that's fine.
Just a very quick one. I'll just show them. I won't take too
Yeah,
long on that.
no problem. No, take your time. No problem.
Share screen, it says. Entire screen. Okay, so here we are looking at this. So for example, traders, if I were to, let's say, I took a look at even GBP USD. So if you take a look at GBP USD at the moment, right, traders? So if you take a look, if I want to put the SMI Elite stats table on that, if I say show stats chart, and I show this. So for example, when this is a really good one for you guys to look into, is when the orange dot comes in and marrying up with the VSA diamond as well. From that point on the close is what we look at of the bar, on the close of the bar, where let's say if I put a blue line over there, very simply how to use the OE table is that I can see that from the close of the bar, that's your start point, once the dot comes in on the SMI, and it also aligns with the VSA diamond as well, the VSA dot, which is the red as well. So the orange dot with the red towards signaling towards a short. Then I can go back to these tables and I can take a look that 85% of the time it will move in my favor 5 pips, and 71% of the time it will move in my favor 10 pips. Now, when would you use the bigger distance? When maybe the time frames correlate, the BRO correlates, the stretch correlates, all of that. So if it then moves further. In this example here, in today, if you had taken it on the dot with the VSA diamond aligning, that you could have taken it towards 10 points because the BRO was aligning as well, and that would have easily hit that point, because from 12381 2371 is the low of that bar, and that would have easily hit that target at 10 pips, and you would have got your open equity based target. That is one way of using it. If you want to use the larger targets where it gets to 20% of the time whenever there's a dot marrying up, you can increase that probability by doing it along with the VSA dot, diamond, and the volume correlation, and with more time left for the day, and in terms of your average range matching up as well. So that's some ways where you can use the stats table for your target position, because exits are where you make your money, actually realize your profit. yeah, I think that's one thing I just wanted to add on over there, Aaron.
Yeah, thank you very much, Tiro. Thank you to Tiro. Uh, if you for more information on what we do and the system and any information you might need in regards to SMI and Trade to Win, the VSA package as well with the live trading room, you can visit tradetowin.com, which is quite easily accessible. And if you have any question, there's usually monitored almost 18 hours per day is monitored on the chat area where you could, this area here, where you could talk to someone live, and you can ask any questions you might have in regards to, you know, the any questions that you might have in regards to the trading aspects of the software and so forth. Paul is asking what training is available to develop a strategy, and what is the learning curve to do this. Paul, the training is available. As I said, I'm running the live trading room Tuesday, Wednesdays, Thursdays, Fridays when time permits. And I do 4 hours per day from 12:30 p.m. right to 4:30 p.m. UK time. So it's something that you could get involved. You can always go online to Trade to Win and speak to my colleague on the chat area. They will give you more information and obviously have a look and see whether that's something that suits you to join in. So the trainings always happening. Tiru, Gavin, myself, we always do webinars as well, which you could also attend, and those webinars are usually free of charge as well. John is asking, can I join the trading room with a smart center? Of course you can. I've got about 20 people, 25 people that use a smart center in my room currently, at least more than 25, I know. I personally do have a smart center myself as well, which I do bring into the live trading room as well. Really, once you do the VSA and you're sitting in front of your smart center, what I explained to you and what I do, you can do that the same way with your smart center. I mean, most of my people in my room are I call them friends, really. They are like my friends, really. They're part of my room. They're like my friends, and they all like using the smart center, John. So yes, you can. Of course you can. So definitely. So Paul, and I hope I answered your question as well. The learning curve is patience, patience, and patience, and practice, practice, practice. Don't you agree, Tiro? I think those two things are vitally important to develop your trading. I hope. Do you agree with me,
Spot
Tiro?
on. Absolutely spot on. I think you nailed it. I think it's a big thing, isn't it? Patience, and that is one thing that 98% of the population doesn't have. And
Absolutely.
you just have to master it over time. Unfortunately, there's no way around it, especially in trading and investing.
Yeah.
You
Yeah.
have to have patience. It's not. I think the toughest thing. I mean, we reflect on all of this. You see, it's not the same as going to a job. You see, a job, no matter how well you perform, 9 to 5, at the end of the month, there's a nice paycheck coming in, and money is coming into your bank account.
Yeah. Yeah.
But whereas with trading and investing, it's not every month it's going to be like that. Some months might not be that great. Some months might be awesome. And then it
Yeah.
averages out to becoming a 5 to 10% per month
Yeah.
over the year. And that is the thing they got to get used to, and for that, and they need to have patience. But there's pros and cons as well, right? Because what really manual work are you putting rather than mainly mental work? And once you got everything written down and you know why your age must continue to work, I mean, it's just a click of a button, isn't it? You're not really doing any manual labor like you know carrying a brick and putting it into into building a house. It's not really crazy amounts of really physical work. It's really mental work. And once you got it all sorted and you're clear with your plan, it's really less minimal work in terms of the amount of physical effort is required. And then the other thing is just sitting back and have the patience. It's
Yeah.
passive almost.
Yeah.
And the good part about this is scalable as well.
Yeah. Absolutely correct, Tiro. I agree with you 110% there. I also have to say that as part of the live trading room, we are like a community. People talk to each other, people communicate with each other through the WhatsApp, and really, that creates that beautiful, environment because most people find trading as a lonely place. So by being part of a trading room and be involved, you basically have the same minded people as yourself in that place where they all understand, and they people put in comments into the WhatsApp group. They put in charts, they put in potential trade setups, and this is what is important also to understand, that you know it's not about, you're not alone. You'll be part of a group. You can ask questions, you can put in your charts, you can do all of those things.
It's very important, isn't
So
it? It's very, very
yeah,
important. In
yeah.
fact, they say
So
there's two things that has got a biggest impact in your life. One is that the people that you hang around with, and two is the books that you read. And definitely around what you said is, when you have a community of like-minded people, it adds to the people that you hang around with, and it brings about the fastest amount of change towards your objectives.
yeah, absolutely. I mean, it doesn't matter if the community that we have is they have incorrect thinking or not. It's not about that. You could make your comment. It doesn't really matter. At the end of the day, you're the person who makes the judgment on your trade and so forth. At the end of the day, you decide to go into a trade or not, and so it's part of. But what I'm trying to say is not the reason we created this live trading room is for me to take the trade, not only teach, but also show you live trading with a real account, show you the trade and get in, manage the trade and come out. By the way, I'm not running a room for you to come in and copy trade. It's not about that. It's about me showing you the VSA, or when we're using SMI, all of those methodology that we have to help you get better and better at your trading. Sorry, Tiro, you were going to say something.
No, nothing. I think you're absolutely saying the right things. I mean, especially when you got someone doing it and they're showing an example. I mean, that gives you more clarity and different methodologies what you can do, and then you can go back to your crib sheet or your strategy rule sheet or your trading plan, whatever you may call it, and then write down all those 5 things which we spoke about today, the strategy construction, and get more
Yeah,
and more clearer.
yeah.
And I think it's not necessarily, people must understand, not necessarily everybody's got to do the same strategy. It's not like that. Then all traders will all be the same, right? Entering at the same place and exit. It just won't work like that.
No,
Eh,
it's not set in stone, is it? It's not like,
Exactly.
yeah. So,
It's flexible. I mean, and that's what you guys got to get clear. And Aram is doing a fantastic job here by giving you examples and giving you the energy and the confidence to go and formulate your own one, or to form something very, very similar. I think that's what they are in. And when like-minded means doesn't need to be exactly the same, um,
yeah,
following the
yeah.
same strategy, but just, everybody is in the trading game. Everybody is there, bouncing off ideas and
Yeah,
helping each other.
well, yeah, fantastic. You got a question coming through, Tiro. Maybe you can help as well. How do you? Paul is asking, how do you capture journal trades and use this data to analyze where the strategy can be improved and refined?
Say the second part I got, how the strategy can be refined. What's the first part he's asking?
How do you capture, or in a bracket, journal trades and use this data to analyze?
Right. Firstly, you have to have a trading journal, um, where you log in every single trade entries, your enter date, your exit date, and all of that. Let me see if I can pull up an example. I've showed it before, and we keep monitoring all of that throughout the year and throughout every single day as well. Let me see if I showed. I think it's just coming up now. Let me see if you guys. I think they can see, isn't it? They can see my screen, right? I think.
Yes, Zero. Yeah.
So if you can see over here, so that's our cumulative performance for last year. This over 3 strategies that we are measuring. But in detail, this is just over every month. But in detail, if you look at each tab over here, that will go into the breakdown of each strategy over here. So over here, if you take a look, then you write down everything. Your entry date, your exit date, your short, exit price, pips, expected, actual profit loss. These are at least the essential columns you must have, and you can see every single thing we are logging in real time as well. Okay, measuring the performance of the strategy. That's one thing in answer to your questions. How do you log it in or capture all the traits and all that? So that's one. Now, when do you know that this is not going according to your um, to your favor, and when to optimize it? The way to do it is, traders, first of all, you can only say something it's not working better or going worse only in comparison to something else, is it not? That's the only way. You can only say someone is taller in comparison to someone else. If there's only one person in the entire room, then how can you say that person is taller? He's just tall. That's all you can say. So when you're telling me, how do I know when to optimize it or whatsoever, or whether the results are good or not? Then you must have some kind of comparison. And the comparison is towards what? Because I come from a research background from my cardiovascular days, the comparison usually is to a constant. Okay, you must have some kind of results based on a constant parameters. Now, what is that constant parameters? Is the strategy that you tested upon, or you did some back testing on, you wrote down all your rules and when you would enter it and when you would not, all the 5 things I spoke about. Yeah, so that constant you must get the results for. Once you got the constant, your back testing results, your system results you call it, then when you run this in forward testing, then you compare that to your back testing. If the backtesting and the rules have been put together out of strong logic, there will be a higher chance of reproducibility. If it is not been, then the reproducibility won't occur. But of course, at this point again, you must remember the P word that Aram talked about, right? Which is patience. You can't just say, you just trade up for 2 trades and it's and it's not making money, and then you say, oh no, that's already worse. Let me go and refine it. No, you have to compare it to your backtesting trade sample. If your backtesting trade sample is 1,000 trades, then at least do this for 100 before you then say whether it's working or not. And what mainly would you be looking in that 100 trades? You would mainly be looking not at the profit factor, mainly at the drawdown factor. And the drawdown again can be split into so many parts and all that. We don't have really much time on this session, but on the next one, maybe we can go into this a bit more in detail. But in summary to your question, the trade journal, I gave you an example. The second thing is it better or is it worse, or when to refine? You must have a constant, and then you compare your forward testing to the constant, is what we're doing here as professionals over here. So hopefully that answers the question, Aram.
Yep. Thank you very much, Zero. I mean, that's really. I mean, we can start to wrap it up now. I mean, next week, are you in the trade show next week?
Trade show, no. I won't be able to make it. I was just talking to Gavin about it, but yeah, I won't be able to. But will you be there? I think you'll be there, isn't it?
Yeah, I'll be there. Yeah, I'll be there, and I think some of my colleagues as well from the trading room will be coming, which is quite good.
Ah,
I'm looking forward to meeting them.
oh, that'd
Because
be nice.
yeah,
Yeah, yeah,
it'll
yeah,
be
yeah.
nice. So it's lovely. But anyway, thank you very much, sir. Any last words of advice to anyone out there?
Um, all I would say is, if I were to say anything, is have clarity. Have clarity. Have clarity in your trading strategy or trading plan, if you may call it, and absolutely know why it must continue to work. Keep reflecting on that. That's what I would leave you guys with. absolutely know your edge, know why it must continue to work once you've put your strategy together. But start off with the strategy construction, everything we spoke about today, and keep
Yeah,
reflecting on why
absolutely.
it must continue to work. And talk to professionals like us, talk to Aram, talk to me or Gavin, and we will support you on the way. And I think these intraday rooms will really help them, Aram, as they come more and more to it. And it should
Absolutely.
encourage more people to come and join as well, because there's not many people out there who trade live and who can say why they're taking it, why they're holding on to it. So it's incredible, immense value over here, and that's what I would say with people is get clarity and get a good mentor to guide you on the way to finding out why your strategy must continue to work.
Yeah. Thank you very much, Sarah. Thank you. Thank you, everyone. Thank you all for your comments and questions. Please, we're going to bring this lovely session to the end. If you need any more information, just visit trade2win.com. All the informations are there in regards to SMI and also Trade to Win live trading room, and of course the VSA Lite software as well. If you
Aram, I
have
just
any,
remembered as
yeah,
well, on TradingView, they can follow both of us as well, isn't it? Because we're doing a lot of price and volume trades as well.
yes, yeah,
So if they want to find, I think our name is Master the Markets 2010 is what we got here. And you guys, I mean, if they want to follow you guys as well, it's Trade Guide, isn't it? Just simply Trade
it's
Guide, right?
Trade Guide. Yes, it's Trade Guide. Yes, yeah.
So I think that
Yeah. So yeah, you can follow us as well on the Trading View as well. That's no problem. But anyway, thank you very much, everyone. And we're gonna bring this event to the end. And have a happy trading to all. Thank you very much, Sarah, for being part of this event. Very, very knowledgeable, and as always, it was a pleasure to have you here. So yeah,
thank
thank
you,
you,
Aram.
everyone. Have a lovely weekend. Have a lovely rest of the way, and until the next event, bye for now.
Take care, bye.